Hi everybody, this is AJ speaking. This is part 3 of my Tesla 4Q 2024 financial review. In the prior parts we discussed high level the key financial metrics without going into any detail. And in the part 2 we discussed total revenue components and also some of the drivers like ASP. And in this part 3, we continue diving deeper into ASP developments in the fourth quarter. And as we established in prior parts, the primary driver of Tesla's fourth quarter was a almost record sequential decrease in average selling prices of $2,100. And here you can see the decrease in by main product lines. You can see that the Cybertruck average selling price came down from almost 100K to just under 90,000. This was driven by Tesla unlocking less expensive versions of the Cybertruck. Most importantly, Cybertruck Foundation series coming to an end, which carried a significant premium. Once Tesla releases the lowest trim, which is not yet the case, but I expect this vehicle to be released relatively soon, then obviously Cybertruck average selling price will continue to slide down. But this was totally expected. Model S and X prices also saw further sequential decreases. However, the one that is by far the biggest needle mover is obviously the Model 3Y product line, and this product line came down from just under $40,000 last quarter to below $38,000 to $37,600, which is the lowest ever recorded pricing for this product line. You have to keep in mind that China continues to increase its contribution, and in China Model 3 and Model Y are significantly less expensive than in the North American or European market. The second element, aside from ASP, that had a negative impact on automotive sales was the sequential reduction in regulatory credit revenue. You can see in this time series that recognition of these revenues tends to be quite volatile from quarter to quarter. However, as you will see in a second, there's a significant and robust upwards trend, and you can see, for example, in 2024, we saw an all-time high at 890 million in a single quarter. That was followed by the second highest ever recorded reading of 739 million, which too was followed by the third highest ever reading. So you can see there was a significant increase in demand for these credit revenues. A significant driver of Tesla's increased credit sales is other automakers quite lackluster performance in electrified vehicles. Electrified vehicles include not only EVs but also hybrid vehicles. There are different kinds of hybrid vehicles, and depending on what type of hybrid vehicle it is, etc., automakers can earn various amounts of credits, but many of the large automakers, they lack sufficient volume to meet fleet emissions regulations, and to avoid penalties. What these automakers can do is they can pool their emissions with someone like Tesla, or can buy credits from them and offset their excess emissions. The important point about these automotive regulatory credit sales and their revenue is that this revenue is extremely valuable, because this revenue is pure profit. So it's basically like you're selling something at 100% margin, and that's why even these amounts look relatively small. Tesla generated on around about 25 billion revenue, 700 million in these credit revenues. They have a very outsized earnings impact. And down here you can see the full year numbers. So in 2024, Tesla recognized over 2.7 billion of these credit sales, and the prior year was 1.8 billion, and the year before it was also 1.8 billion. So you saw there was kind of, let's call it, stagnation in growth, but then in 2024 there was a significant pickup. And by my estimate, if the US started to cut credit revenue in 2025, Tesla probably would still end up generating over 2 billion in credit sales in 2025. On this chart, we look at the long-term trend. So this is the trailing 12 months. So if you add up on a rolling basis the last 4 reported quarters, you get to 2.8 billion, which is the exact same number that you see down here. 2.8 billion is the number here. And you can see how Tesla generated credits within a fairly narrow margin for around about 2 years in 2018, 2019. And then sales significantly picked up, which was obviously partially driven by Tesla's sales volume increase, but and also in changes in emissions credits regulations. Tesla reached a new level, call it around about 1.7 billion in 12 months revenue generation, and then recently we reached this new level that is above 2.5 billion. On this chart, this is kind of the same thing again, but broken down into quarters over a longer time period. You can see how significantly these credits have grown, but then also the substantial amount of money that's generated for Tesla. And you can see that since 2018, Tesla generated about 10 billion in credit revenue, and that's pure profit. So there was a hugely beneficial to Tesla. So that's why if US credits go away, it's not great for Tesla. But given the scale of the business, it keeps growing very quickly. This will be probably not a major needle mover in 2025, provided there aren't significant changes in Europe and of course in China. On this chart, we look at sort of the last puzzle piece of the automotive sales piece, and this is the leasing revenue stream. And you can see leasing has been trending down for a very long time. There are various reasons. One, a leasing sale is not very attractive to an automaker. It makes reported financials in the reported quarter less. It makes key metrics look worse. There are various accounting reasons for that. The revenue emerges only over time, and to avoid that, let's call it optics, Tesla used probably a clever strategy. What they did is they pushed almost the entire leasing activities to banking partners, and this avoids a lot of the issues you have as an automaker if you account for leasing sales on your own balance sheet. So the primary benefit for Tesla was that first of all, they can sell more volume, more vehicles, keep the factories business busy, in other words, but also they can then recognize more revenue upfront than would be otherwise the case. Of course, the downside of this is that the banking partner will take part of the margin, and this is also part of the reason why we saw the significant sequential average selling price decrease in fourth quarter, because there's not only leasing sales, but there's financings, and Tesla offered some very generous 0% financing to drive more volume, and of course Tesla can get financing at 0% rates. So whatever Tesla pays the banking partner for the financing, the actual financing rate, Tesla is basically subsidizing this rate, and this is reflected in outright sales. So the revenues numbers looked at earlier, and the average selling price. So on this chart, we look at the disclosed share of leasing sales, and what you notice here that we saw a major pickup in the share of leasing sales in the fourth quarter. This was obviously driven by these highly attractive leasing deals that, as we just discussed, were outsourced to banking partners to the mostly, and you can see how this affected Tesla's financials. You saw on this slide, leasing revenue continues to trend down, but here the leasing share spiked up quite significantly. And the reason why you didn't see here an increase was because Tesla pushed the business to banking partners. This then gets us to the total automotive revenue, including leasing and including credits, and you can see that Tesla brought in 19.8 billion automotive revenue. This is an 8.2% decrease sequentially, and year on year, and a 1.1% decrease sequentially. So Tesla managed to roughly maintain the revenue despite a decrease in credit sales, and pushing a lot of financing deals, lowering the ASP, discounts, etc. So that was clearly a very tough quarter for Tesla. Overall, this left the auto segment with 77 billion in total revenue for the full year of 2024, which is a 6.5% decrease year on year. Tesla's all-time high was in 2023, where Tesla generated in the auto business 82 billion. So this brings us to the end of part 3. In part 4, we'll be diving into Tesla's energy storage business. So see you in the next one.